and welcome. You're watching Business Today Television. This is Market Today. I'm Sakshi Batra and with me is Shail Bhatnagar. Well, we are starting a new week. This is going to be a truncated week for the markets after an extremely volatile week that's gone by where the Nifty recorded the second straight weekly loss. Now, with the turn of events over the weekend, this holiday shortened week also promises to be nothing less than what we saw last week around. Hindenburg has returned. This time it has targeted SEBI chairperson Madhabi Puri Buch and has her and the entire SEBI on its radar. US-based short seller Hindenburg Research has alleged that market regulator SEBI had reluctantly not acted against the Adani group, and this could be linked to its chief Madhabi Puri Buch having stakes in offshore funds associated with the conglomerate. In response, Madhabi Puri Buch has also labelled claims as baseless and characterized them as an attempt to have a character assassination at the chief of SEBI. And now this yet again puts the entire Adani Group companies in the spotlight for today's trading session and the entire markets as well. Remember, shares of most of the Adani Group companies have already recovered. Most of the losses that they made in the first Hindenburg report came in on January of 2023. Now, while the handover from the Wall Street has largely been positive today, it's going to be largely the focus on how Hindenburg 2.0 will impact the market momentum this week. Good morning to all our viewers and good morning, Shail.
Good morning, ladies and gentlemen. First things first, there have been very prompt and absolute denials coming in from the SEBI chairperson, Madhabi Puri Buch, along with her spouse. Apart from that, the Adani Group has again issued denials in line with what the SEBI chief has said. And the offshore entity that was run by 361, this is the wealth management company, has categorically stated that at no point of time during that offshore fund's existence was there an instance where Adani Group shares were purchased. Even there were derivatives that were acted upon. So as far as the markets are concerned, this is a clean slate that is coming from all the three entities. Now, what will happen in the market? We have Vineet Bojlinger, head of research at Ventura Securities, joining us. Remember, for a long period of time, Vineet has also been very bullish on Adani stocks, in particular the green energy space. And over a period of time, that call has worked out wonderfully. Now, what will happen in the market? Only time will tell. But the fact is that at a time when we are grappling with a lot of issues, which is the yen carry trade, the weakness in the market from a record high, and of course 2 successive weeks of negative closes, this episode is likely to dent sentiment further. How long will this sentiment remain weak? Only time will tell. Is this an opportunity to get into frontline Adani counters if there is a knee-jerk negative reaction? We'll go to Vineet and have this conversation with him. Vineet, if you can hear me, your first response to what do you think has Hindenburg tried to do? Obviously, these are allegations that have been promptly kicked out of the window by the 3 affected parties.
So, let us understand the entire saga from the point of view of the accuser and the accused. If you read the publication of the accuser, and if you ignore the entire note just for 30 seconds and go to the disclaimer, it says that Hindenburg has short positions in the stocks mentioned at any point in time. What does that tell you? That the report is with a vested interest. So Hindenburg has short sold and then they have published this report. Otherwise, why would Hindenburg issue a report on Adani if they have not short sold? So there is essentially a action on the part of the accused to influence the stock price, or in more allocatic words, is to manipulate the stock price. Okay, and the exact accusation ironically is of manipulation of stock price. Now let's come to the rebuttal by the accused. There are 3 different parties which have come out with disclaimers and denials of all the stated facts and in very, very succinct language. So, let's understand what 360 says, that Anil Ahuja's fund was $48 million, 90% invested in bonds, and did not have any investment in Adani stocks, right? And Bush family's participation in that fund was only to the tune of $1.5 million. And during the time the investment was held, if you notice, the Adani stocks over a 2-year period would have gone up by only 30% max. So what it tells you, 15% CAGR, investment of 1.51 in a measly fund, which is $48 million, does not hold water that they participated in the manipulation of the stock price, right? Second thing is, another allegation was made that, to influence BlackRock getting the REIT in their favor, it was done. Now, if you see, the SEBI has come out with 300 circulars, and you ask any broker, it has been a pain for them, because it was done in a way to protect the investor, right from the settlement system, thinning down margin funding to ensure that price stability stays in the markets. And at all, it has been to make the Indian financial system robust using three pillars of technology, transparency, and corporate governance. So there is no way that this anything that happens will impact the market. So the Hindenburg has come, after the Supreme Court judgment. Hindenburg has now come and, first they labeled allegations against Adani's, and they wanted Adani to be investigated. A bill was filed, and the Supreme Court asked SEBI to do the due diligence. After SEBI gave a clean sheet, now they're attacking SEBI's chairperson and saying, now you provide us with the evidence. So will this be another part of a similar ploy that is being carried out? Is a question mark, that you give us the evidence while, these guys short the market, go scot-free, make money, while, domestic investors suffer. So what we have to draw from this is the fact that, the last time the Hindenburg came, they caused a severe dent in the Adani market capitalization, and the group had to go back on its strategy of growth by at least a year. And investors lost a lot of money. But this time round, this is not going to work, because the Indian investors are wary. Our markets are much more agile. We are robust. And we have seen that, the flows are so strong that, any amount of FI selling is absorbed into the market like a piece of cake. So, to my mind,
Right.
this Hindenburg report is a complete sham job, which is being carried out to impact the sentiment of the Indian investors and to bring down the markets because of some vested interests.
Very good morning to you. You've very cogently explained what the entire scenario is.
A knee-jerk basis, and you think that Adani stocks will react on a negative basis? If yes, what are the one or two stocks you think should be purchased at lower levels?
So it's very interesting. Recently, only Adanis have raised a lot of growth capital across various entities. And to my mind, these entities themselves represent pockets of opportunity in case there's a slam dunk initially in the morning. So we think that Adani Green, Adani Enterprises, Adani Ports, and Adani Energy Solutions are 4 go-to stocks in the Adani basket. One more stock which is actually not been on the radar is, Adani Wilmar. So, there we believe that the stake sell out by the Adani group, once it is consummated, this stock being in the more of the, the B2C space, can do very well, because, the brands are very firmly entrenched in the market, and the commodity cycles, which are the input costs, are easing for this company. So we think that there is a good appreciation to be made out there.
So, Vinay, good morning to you. Apart from the Adani Group, also, do you see a knee-jerk reaction on the entire markets because of this? Because last time around in Hindenburg 1, it was clearly one group that was targeted. This time, it is the capital markets regulator itself and the chairperson. Do you think that will have a knee-jerk reaction to the already weaker sentiment that we are at?
So, you know, if you want to combine geopolitics and the economics of investing in India, okay, I think it could possibly be a report which would be, the timing of the report is on a Saturday evening. They could have done the report on Monday morning if they wanted to. So, it is a report which is meant for the international community, to my mind, where, international investors do not get out in a jiffy, because there is nothing wrong with the Indian economy. But there could possibly be a, consistent FIS selling, which uh, which puts in enough supply of paper in the Indian economy and gradually dents the market. So yes, on the flip side, if you look at two possible scenarios, one is where I spoke about that nothing happens, which is my top scenario, which I expect to happen with a blip in the morning, or on a larger time span, we have sustained FI selling, which puts the supply out in the markets, and hence, it's like a negative rating for the Indian economy, because now the regulator itself is under question. So, now you start questioning the regulations of India, and, you know, and the Indian economy, and that is could be another possible allegation that is thrown against us, and that could be of a more sustained reaction rather than happening slam dunk.
Vineet, let's look at this from the broader point of view. You have a crisis brewing in our eastern neighbor. India is surrounded by hostility all around, whether it's political or economic. And in the last 4 years, post COVID, the country has also emerged as a beacon of sustained returns and, of course, economic progress. Just off chance, is this a wider conspiracy you think to derail this whole growth story that we are seeing? Maybe one of those small pegs in a wider conspiracy to sort of impact foreign flows or even hurt local sentiment.
So, I will provide you a very interesting anecdote. June 4th was when, the election results were declared. And June 4th was the date in Bangladesh when this entire saga started, because their Supreme Court gave a judgment of increasing the reservation from 5% to 30%. Okay. So if you plot the dates and the outcome of these two events, while they seem discrete, the fact that, it happened on the very same date is like connecting the dots in geopolitics, because in geopolitics you can never prove anything except via circumstantial evidence. And then the matter picks up in Bangladesh. The Supreme Court reverses its judgment, right? Matter becomes silent. But again, that entire student embroiled judgment or the youth embroiled judgment suddenly takes geopolitical, communal angle. The army gets involved, and the present incumbent government in that country is forced out. And then you have a whole exodus of people trying to come into India from the border. And, in this way, there is a kind of a subtle attempt to, warn the Indian government that you better listen to us or else. So this is the kind of the geopolitical positioning that is happening if you look at it from a bird's eye view, and that is how I see it. And this is a quagmire which is still playing out, and too early to say how it will pan out. But definitely there is an attempt to irk up sentiment in the Indian markets. And what has happened is, contrary to their expectations, the minority community in Bangladesh united together, raised its voice, under the threat of genocide, and to deflect action, attention from that, we had a Vinesh Fogart case with a toolkit. And when that was snuffed out, immediately we had Hindenburg comment. So we had to question the intent of a reshuffled and hastily put out Hindenburg commentary without any kind of criminality being proven, or alleged, while only they make false accusations.
Vineet, also help us understand, do you think the last time around, January 2023, it was the onset of a long legal saga, continuous volatility within the Adani group because of the Hindenburg research allegations? Do you think this time again we have to be prepared for another long legal battle to take place that could continue to impact sentiment day after day, week after week, and create a lot of volatility even now?
So, we are in very, very interesting times because, the elections in the US are going to be path changing for global economic and geopolitical policy, right? On one hand, you have the Trump lobby, which says that, I will come and stop the wars. And on the other hand, you have the present incumbents, which says that, we will widen NATO beyond our limits and we will continue our Eastern uh, aggressive stance as far as Ukraine is concerned. So, that is going to play out very aggressively. And the volatility that we saw in sentiment in the Indian markets will be seen also in the international markets. And when you couple it with the yen carry trade, okay, ballooning of international debt, inflations, and recessions coming in, civil war language being spoken about in UK, all this is going to create a lot of international turbulence, and ultimately we live currently in a globalized economy, and we will not be able to escape that. So yes, the international turbulence is going to be volatile going ahead.
Right. Vineet, beyond the Adani group and beyond this impact within the entire scope of the markets right now, if there were to be this knee-jerk reaction that we are discussing right now, what opportunities open up for investors to really take the benefit of this dip that might not be sustainable because this is external affected, and once it is proven, things could be back on track?
So I think, you know, the no-brainer way to play this out is track the PLI schemes and focus on the stocks which are, which have applied for the PLI, and those companies track their growth strategy. So if they are showing you growth in the, revenue numerical, because it is entirely linked to revenue and how much business you generate. And that is how you get your PLI allocations that come to you. So I think this would be one of the simplest and the easiest way to benefit out of any volatility, confusion, chaos, or slam dunk that happens in the market.
Okay. Any key stocks that have come onto your
Vineet,
radar?
before we let you go,
Any key stocks, Vineet, that you'd like to highlight beyond Adani?
we need any.
Okay, so I'll just preempt your questions. And I think that some of the good companies which could do well apart from the Adani stock is, we've done recent coverage on Skipper Limited. We have done coverage on V2 Retail. The Ola IPO is a very go-to script to invest in. And if I were to talk a little bit about Ola in 1 minute of detail. I believe that, if you see in 2018, in China, there was not a single electric vehicle, a two-wheeler. If you go today, everything is electric. So, if that market were to be a benchmark for how electrification and the penetration of the electric vehicles will play out in India, then, in a worst case scenario, 7 years, we would be north of around 40 to 50% of penetration bare minimum. And, Ola we sell 2 crore two-wheelers every year with a growth rate of about 5 to 6%. And with electrification being 50% of that, and Ola today has a 40% market share. And even if you say that their market share comes down to 20%, you are going to have a company which is going to be selling double, triple, or even quadruple the number of vehicles that they sell today. So, Ola Electric, by those means, could be a profitable play.
Right. Vineet, before we let you go, do you think that the best that the Indian market had to offer in 2024-25 as far as the Nifty and the Sensex are concerned is behind us, given the kind of problems that we are now facing, both geopolitical and local? In the case of Hindenburg now, a lot of politicians have also stepped in particular the leader of the opposition now demanding a GPC and asking possibly for action against the SEBI chief. Given the volatility ahead and possibly maybe some decent profit booking, is the best behind us?
So, we have seen one very aggressive dip during June 4th. It was a time-wise constricted dip, but we saw a very, very deep correction take place. And from there, we've come to new highs, right? To the point that the international markets do not destabilize and lose value. I think the Indian markets will sustain their growth, and it is possible that we consolidate out here. But to my mind, I believe that the second quarter is going to be very, very strong. And then we might just say, oh, to hell with these international guys, let them do their own games. Let's chart out our own trajectory of growth.
Right, ladies and gentlemen. Vineet, thank you so much. I really, really appreciate this early morning feed that you've given us on this very painful issue that we are just about to face as far as markets are concerned. Very kind of you, and as always, it was wonderfully interesting to speak to you and listen to your views. Thank you so much for your time.
Thank you for having me.
Okay, ladies and gentlemen, just the right time to introduce our next guest, Mr. Dharmesh Kant, Head of Equity Research at Cholamandalam Securities. Namaste Dharmesh ji, a very warm welcome to you. My sincere apologies to keep you waiting for the past 5-7 minutes. As you know, there is a major crisis in the markets as far as this new shot of the arrow from Hindenburg is concerned. What do you think will happen in the markets today, the post 1 hour after this report has been digested?
Yeah, Namaste, Salji. Thank you for having me. Very good morning to Sakshi and to all our viewers. Salji, I think this is a person-specific allegation which is there. And rather than being, rhetoric or something like that, I would only request that truth must prevail. And whatever is the truth should be, independently brought to the table. The second fact is after 1 hour, market will be back to normal. So this is not a company, manipulating their accounts or some major group of companies getting into a fraud or something like that. It's just an investment-related thing in a particular fund or company. So that too is not a very meaningful investment, which is going to move needles either ways. So I don't think this is going to impact market. This news flow per se should not be impact market. And markets are very smart. They know how to tide through noise and look into the fundamentals. Fundamentals, though, is not that great. I mean, Q1 earnings have almost passed through. I did an aggregate of almost 450 companies, and the earnings which was there was on year, it was 4.5% kind of a bad growth. So that's the problem area. And just to put how investors are, seeing this thing. Yesterday evening, where I went down in my society to go out with a family dinner. So there's a prominent CA who lives in my society, a very well-known guy. He just said, कल अगर market गिरे तो just buy कर लेना. And this guy used to take me advice 6 months back asking for investment tips. So that's the euphoria in the market. That's the liquidity which is chasing the market.
Yes.
So just be comfortable, look at the fundamentals and go on new investment picks.
Absolutely, I so agree with you, Dharmeshji. I think as Indians, we have sort of taken it to our heart and inscribed it in our brain that buy the dip in India. And that seems to have worked wonderfully over the last three major occasions that have come in over the last 50-55 trading sessions. Let's hope this one is even lighter and we move ahead after the first 15-20 minutes of knee-jerk reactions. Okay, my final question to you, sir, before pre-open starts is, you've analyzed the entire first quarter earnings. Maybe one or two outperformers you think make sense at current levels?
I think PSU banking space is looking very attractive, given the way they are placed on the credit deposit ratio, very comfortable, and they had a decent share of credit growth with improvement in asset quality and slight improvement in NIM. So two companies which immediately comes to my mind in case we are getting a dip today. One is Canara Bank and the other one is the Bank of India. Both did very possibly good set of numbers. And in this present context where banks are struggling for the CD deposit, there remains a very good buy pick.
Right. Right. Ladies and gentlemen, the pre-open is upon us and it's not a pretty picture as far as the Adani group is concerned. A 20% down circuit on Adani Green, Adani Power, Adani Total Gas, 18% lower on Adani Energy Solutions, a 10% downtick on Adani Wilmar, and of course Adani Ports and Adani Enterprises, which are a part of the Nifty, will first see a 10% downtick. That's what the FNO works as. ACC and Ambuja are flat, nothing much in terms of losses, but this is worrisome to say the least. The Nifty meanwhile has settled out flat, down 10 points. So pain for Adani and decent downticks, the limit possible as far as Adani is concerned. Let's look at how the other structures are panning out. I see a 24 rupee uptick on Infosys, 1895. Let's see the green tick on TCS as well, 14 rupees higher at 42.43. How about the three major index heavyweights? Okay, there's a very decent green uptick on HDFC Bank, the highest weighted counter, 24.70 higher at 16.75. How about Reliance? 12 rupees 60 lower at 29.36. How about ICICI Bank? This is almost flat at 11.65, nothing much to worry about. 47 points lower on the Nifty, 24,323. A very, very quick look at the top traded counters in NSE 500 and then we'll move ahead. Very strong numbers from PNC Infratech, 13% higher, 14% higher at 531. Honasa Consumer, better known as Mama Earth, strong numbers, 5% higher, 498. There is a tie-up that has been announced by Amara Raja Energy Mobility. The counter is 4.5% higher at 1573. The other point I want to see is, okay, now this is very, very painful. I will have to highlight Adani Power. Now 20% lower, 566. This is the top loser in NSE 500. 20% lower on Adani Total Gas. Again, Adani Green 20% lower. These are the top losers in the NSE 500. Adani Enterprises and Adani Ports and Adani Energy Solution all down dramatically. Even 361, the wealth manager that used to run that offshore entity, is opening 10% lower at 931. 7% downtick on Adani Wilmar. Dharmeshji, without further ado, this is something that is hurting sentiment very, very aggressively on the Adani group. Do you think this dip will be bought into? And if yes, maybe one or two Adani stocks which you feel make sense on the long side?
See, even last time the dip was bought into in the Adani group of companies, and the stock which immediately comes to my mind is Adani Ports. So that's a very strong company, strong cash flow, expansions has been very good, and both organic and inorganic route they have adopted, and the highly efficient port as well, one of the world's best port facility they have. So Adani Ports is one where we would be looking into, but not today, maybe tomorrow and onwards. So there's always a catch because if it runs up by today's end of the day, then you may miss the bus.
Okay, so this, ladies and gentlemen, how the market has reacted, pulling the 5 or 6 stocks to limit down whatever is possible on a daily basis. That's been hit, and that essentially points to maybe further pain, or maybe after the first 15-20 minutes you will see buying emerge, because remember, in pre-open there is barely any volume. So even if you open 20% down, only those people who had shorted on Friday would be in a position to benefit, and those people will come in to cover up. Okay, let's let this settle down. Dharmesh ji, now coming back to first quarter earnings, I had requested you to probably think of a couple of stocks where you feel vindicated by their performance in the first quarter, and maybe some names which you were disappointed with.
See, as far as disappointment is concerned, it was a large kind of a disappointment because outside BFSI, there were hardly any encouraging numbers to play out, and those numbers look good in the light of relative performance or underperformance of the other group of companies. So, I mean, technology space, I think Gen Technology, IT space looked quite promising. So that is why, and KPIT Technologies. These are the two companies which we are looking into from a positive perspective, and the continuity of earnings is likely to be there. Public sector banks looked much better off this time. I mean, a case in point being Canara Bank or Bank of India or a PNB. I think PNB, the worst is behind, and they are fairly cheap on the valuation metrics. So that is one sector one would be looking into. And defense, we would like to buy on dips. So HAL or a BAL looks pretty attractive. In fact, HAL, almost 14 aircrafts would be delivered by the end of the year. So that will take the entire profitability to a new high when they report the yearly earnings. So one should not look on a quarter-on-quarter basis. So these are the select pockets where performance has come. And there are few other stocks, but Sajid, unfortunately, I cannot share them with you right now because we are coming out with a report on almost 8, 9 stocks in next 1 week or so. So once that is out, it will be there for us to discuss online.
Let me just request your time once that report is out to come on Business Today to please talk about those upgrades and the stocks you have decided upon. Our guests, of course, will be in touch with you. But yes, I do agree with you on this very sharp profit taking that has happened on select defense counters, which just might give opportunity to new buyers to come into, and of course existing ones to add to their positions. There is front page news on a national daily talking about two submarines, two nuclear powered submarines to be worked upon because of delay that is happening in procurement from Russia. So that should help shipyards, and of course Dharmesh ji has pointed out to HAL. Within frontline counters, Dharmesh ji, the Nifty 50, where do you think the maximum outperformance came in the first quarter, and what looks good for subsequent 2 or 3 quarters in the blue chip space?
Shailji, if you look at Nifty 50 numbers, almost 44 companies which have reported their numbers, it was 4% kind of a year-on-year growth, and there was a decline of 6% on a quarter-on-quarter basis. So hardly any areas. I mean, IT was stable, Infosys, TCS, and all came out with a stable set of numbers, but nothing great to talk about or look forward to. Communities has been, decent enough. SBI numbers were optically looked good, but the problem was the slippage on the retail loan. So almost the slippage doubled on the retail loan side, and that remains a problem area. I think ICICI Bank numbers were quite decent. So that is one large cap company when you can look with some stability. Reliance numbers, though not that great, but I think going forward it is likely to be better out because Geo, the entire tariff revision will play out in Q2. So, and that's now almost 23% of the operating profit. So that is one counter which one should be looking into. Apart from that, all other companies are heated up.
Fair point. And ladies and gentlemen, the reason why Dharmeshji's views make so much of sense, that he injects that bit of pragmatism, wisdom, and of course quality stock picking at a time when everybody just wants to buy. As he was recounting, his neighbor advises these days on where to put in money. There is no harm in your neighbor advising where to put in your money, but the fact is that shows how the equity culture has deepened, and probably also points to a lot of froth. Just the right time to welcome Mr. Rudra Murthy, research head at Vachna Investments. Namaste, Rudraji, and a very warm welcome to you, sir. We report 5 down ticks, 5 down circuits on 5 Adani Group stocks because of the problems that are happening. 2 10% each on Adani Ports and Adani Enterprises, and of course 3 20% down ticks on Adani Total Gas, Adani Power, Adani Green. How do you see this episode, and is there any stock that you think is worthwhile from this table to add at these lower levels?
Good morning. Thanks so much for having me on the show. First of all, a word on the report, whatever we saw the weekend, and weekend was fully occupied. But my comment on that is, yes, it is just statements made, and you need more proof for the same. And at this moment, I will just wait and watch. I will not react for those news given by Hindenburg. And let me just tell you, at present level, if I get any deeper cuts on Adani Port or on Adani Enterprises, these are 2 stocks which will be on my radar, and I will look at buying them.
Okay, now ladies and gentlemen, this is the most interesting view that has come in from Rudra. Remember, both Adani Ports and Adani Enterprises opened down at the first 10% circuit. That is what happens in FNO. Now, once the pre-open has settled, Adani Ports and Adani Enterprises are barely down, 2% down. ACC and Ambuja even less, 1.5 and 1.7% downtick. What is worst hit is Adani Energy Solutions, Adani Wilmar, and of course the 3 power stocks from this table: Total, Adani Power, and Adani Green. 20% down, limit down, but remember, there is barely any volume. Dharmeshji, do you think this is a mature reaction that the market has exhibited, especially on Adani Ports and Adani Enterprises?
Yeah, definitely. I mean, this is a very mature reaction, and I think after an hour of trading, we may see even a green tick out there.
Yes. Okay. So, ladies and gentlemen, the 2 experts that we've come in, and before Dharmeshji and Rudra joined us, there was Vineet, who mentioned that 2 possible purchases could be Adani Ports and Adani Enterprises. Again, wait for 15 minutes to lapse, wait for the institutions to do their bit, and then possibly have another independent financial view before you take in into the buys for Adani Ports and Adani Enterprises. Rudra, coming to you, 2 stocks that you think might outperform the broader market today on technical parameters. What looks good?
Yeah, Shailendra, I have a buy call on IEX. This stock has made a very, very strong bottom at around 180 to 185 zone, and it is now just showing strength. So I will be a buyer in IEX at current market price, looking at targets of around 235 to 250 on IEX with a stop loss of around 185.
Just one stock, Rudra?
Okay, another stock if you want me to prefer, yes, for me ONGC looks very, very strong. So this stock has lot of delivery based volume buying, and even fundamentally there was volume growth in the results. So I will be a buyer in ONGC, looking at target of 350 on ONGC to come. One can have a stop loss of around 325 for this long call.
Fair point. And this is where Dharmeshji steps in. Dharmeshji, ONGC, how do you rate the first quarter performance of this very, very profitable oil explorer? How is it valued, and where do you think it is headed based on its financial performance?
See, valuation wise is still, I mean, undervalued just because it's a huge cash flow comfort out there. But limiting on the price levels and the additional tax which government keeps on levying from time to time, depending on the oil prices, is a limiting factor on the stock price movement. But I think that has been digested by the company. So in such kind of a market where you have some volatility stepping in, these kind of companies find much flavor with the investors. So I think bulk of the heavy lifting has already been done in ONGC. But still, 450, 470 can be a good valuation price for ONGC, sensing how it has been placed on the fundamental basis. Be ROEs, cash flow, dividend yield, everything is quite superior with this company. So as an investment bet, if you are having a 1 year perspective or more than that, 450, 470 should be your target price for investments into ONGC.
Okay, fair point. Rudra, any view that you would have on stocks such as ICICI Bank and of course Reliance?
See, for me, ICICI Bank looks the strongest among the private bank, and even if you see their quarterly result, definitely it was way above expectation. So for me, yes, on private banks, if I have to pick the top one, it will be ICICI Bank, followed by HDFC Bank. And in terms of levels to watch on technicals, if you see for last 5-6 trading session, support at around 1150, 160 has been very, very strong. So now at this level, entering ICICI Bank gives you a good risk reward. So with a stop loss of 1150, I'll be a buyer at current market price, looking at targets of 1200 initially on ICICI Bank, and once it crosses 1200, yes, eventually levels closer to 1280, 1300 can also be seen in a quarter's time from now. And a word on Reliance, if I have to see the strong support for the stock, it is now at around 2850, 2870 zone. So any dips to that is a good buying opportunity.
Right, ladies and gentlemen, it's a very mature reaction from the market as far as the Adani group is concerned. All 10 are down, but there is just a knee jerk. Adani Ports 3% lower, 1486. Adani Enterprises 3.5% lower, 3076. ACC and Ambuja are barely down, 1.5% each. Let's look at Adani Power. This is something that is a key stock, 7% lower, 649. And remember the 20% circuits on the entire new energy space in Adani have not materialized. So Adani Green is just 3.7% lower, 1710. Adani Total Gas is 7% lower, 807. And Adani Energy Solutions, which just came out with a 6,000 crore rupee QIP, is 4% lower at 1052. How time will lapse over the first 15 minutes, we will see. But Dharmesh ji, your first comment, fairly muted and fairly mature response from the market to this rubbish that we saw from Hindenburg.
Yeah, definitely. As I said, I mean, this report is not going to dent any company's profitability or business. So economic fundamentals on the ground level remains the same, nothing to do with that. The only concern was the valuation fund, which we talked about. And the other, especially India is the top performing equity market in the world for CY 24 till date. So we are now ahead of Japan or NASDAQ. They are lower than that. We are year till date 12% kind of a return was there on the Nifty index. So you stand out in the eyes of many people because of this kind of an outperformance. Recent correction in the world equities, they corrected 8 to 10% from the top all-time high levels, whereas we corrected only 2 and 3%. And this is not even a correction per se. This is just a running dip in a bull market. So that is how we are placed. But my only caution and advice is it's a company, it will be a company specific market from here for next 6-7 months rather than a sector or a market per se. So market may have a time-wise consolidation, but you will have stocks where the outperformance will come, and it won't be a blanket kind of a buy like all pharma stocks are going up or all metal or all banking. It won't be that kind of a market.
Fair point. Let's look at the broader market now. Nifty down 100 points, nothing to be worried about. 24,264. Remember, this is a truncated week, so Nifty's weekly expiry has shifted to Wednesday, a day before, Thursday being a holiday for Independence Day. So options premium are getting squeezed further. Nifty Bank 270 points down. The Nifty 500 is down 135. Now what's clicking in the green? Ola Electric, ladies and gentlemen. This is 11% higher, a very strong debut, 20% up yesterday, which was Friday. Dharmesh, a very quick one on Ola.
Yeah, I mean, we had a IPO note on that, and but after 2 days of a move, so it's enjoying this uniqueness premium, because that's the only play which is a pure electric vehicle play in the space, and no other has it as a direct play. So people are having their share of the pie. At the same time, if you look at the revenue growth and how the management outlined the path to profitability, that was logical, and they have been doing that. They have been walking that for the last few years number. So a good space to be in, but I think from here it is now becoming fairly valued for quite some time. So one has to wait for 1 or 2 quarters, because now the listing has happened, the quarterly updates and everything will come through. You don't have to wait for an yearly update to get the numbers. So if you are invested, stay invested. If you want to buy, then do it on a staggered manner on a SIP basis. So from here till 130, 140, one can still look forward to buying, but not beyond that. Then you should be an investor after that.
Very good morning to you, Rudra and Dharmesh ji. And I was on India Today and on Aaj Tak just discussing the Hindenburg research report, and everybody wants to know how the markets will react and how the Adani groups will will perform. But I see actually a much better reaction than the first time around when the report had come in. That time it was a direct attack on Adani group stocks. Right now you only see the stocks in lower single digits of a downtick is what we are seeing. And Rudra, let me come to you. Do you see this sign of probably Adani Group stocks coming back into the green just today itself?
Yeah, possible, Sakshi, very much possible. See, first of all, 2 points I want to tell on Hindenburg report. Now, I want to know what is the motto behind this report for Hindenburg. I'm nowhere here to support the Adani group, nor support the Indian government, nor whatever is happening in Twitter is more of an entertainment for the weekend after a long Monday to Friday work in market. So what I want to just tell here is, number one, the objective of Hindenburg report and making these statements are all publicly available. Whatever data they have given, it is not a data which has been specifically given to them. It is something which is not a primary source of a data. It is a secondary data, well published, well available already, and making a use of these data and trying to put a black spot. I'm not into that camp which says that these are things which are to be probed in and so and so. Now, might be in fact because I'm commenting on Adani group, and if I have some shares of Adani, then you can even say that Rudra is also involved in this particular stuff and he has to also prove the same. Okay. So my simple and very clear point is these are baseless and these are statements just made. Okay, I will ask another question which is not discussed anywhere in social media or whatsoever. Last time the report came just before they wanted to raise funds, and when FPO was about to come, then the report came. This time also report is coming just before they are planning to again go for another fundraise. So tell me please, based on this timing of whatever the issues are, I want to know what is the motto behind this Hindenburg report, and why are you just doing it, timing it exactly just before a fundraise and things like it. So I want to probe and find out who are there behind this, and is it just the shorting of Hindenburg, or is it something to do with US, or is it something to do with opposition of Indian government? And let me also tell you, all this, whatever I am saying, are also as baseless as what it is from Hindenburg report.
Okay, Dharmeshji, coming to you now. Look at the kind of strong reaction that we are seeing in the markets. In fact, Adani, Enterprises, ACC, Ambuja, as Shell points out, is just like mildly down in trade now, just about 0.7% odd, 1% odd as well. Dharmeshji, should you see this as an opportunity for investors to, in fact, take a dip, use this opportunity to buy into some of these?
See, in Adani group of companies, we discussed earlier in the show about Adani Ports. So that's one company which looks pretty good on the value side. Others, I mean, on the valuation metrics, they are quite expensive to my mind. So we have never recommended any of them. Adani Ports is one stock which we have recommended earlier. And this is what we discussed. So like if there is a dip, one can, nibble into it or buy from a investment perspective. So that's the call on the Adani group of companies, and I mean nothing to do with this report. In this report, nothing has been mentioned about the company per se. So let's see. I mean, it's a market, and fundamentals and valuation should be looked into at this juncture before investing. So be company specific and not market or sector specific is what our call is.
Right, Dharmeshji, thank you so much for your time, sir. Very kind
Thank
of
you
you
so
to
much.
join us, and again, my apologies for keeping you waiting in the early part of the show. As again, your views are very much in demand, and of course, we'll keep an eye out on ONGC, which you believe the target should be somewhere in the vicinity of 430 rupees and above. Thank you so much again.
Thank you so much, sir.
Okay, ladies and gentlemen, we'll get Mr. Sunil Subramaniam, a market veteran for the past 35 years, to join us. In his earlier avatar, Mr. Subramaniam was the Chief Executive Officer at Sundaram Mutual Fund. He has recently hung up his boots only on the professional side, but remains a major force to reckon with as far as markets are concerned. He'll be joining us shortly. Okay, Sakshi, now that you're back, let's look at the broader markets. The first 10 minutes we were just occupied with this nonsensical thing that has sort of ruined the weekend as well. Now, entire railway space is abuzz with gains, ladies and gentlemen. The northeast corridor of the railways is now being boosted, and we will shortly be looking at some stocks in the rail space. All of them, Sakshi, are up without fail. RVNL 6% higher, 550. Both the Kavach makers, Kernex 5%, 812, and HBL Power are in the green. IRFC 2.5% higher, Railtel 2.2% higher, Ircon 1.9% higher. So railways as a theme is doing very well. Defense is a mixed bag. BDL came out with a disastrous set of numbers. It's being adequately and more punished by the market. 7% lower, 1330. There is a downtick on Garden Reach, and I want to see what Cochin is doing. Cochin is flat, 2365. In the green are Mazgaon and Zentech Technologies. The other space that I wanted to see was the broader markets. We've been so occupied by what is happening on Adani Group that we failed to sort of look at the broader market. Okay, the bulls are on the back foot on the Lal Street. Only 921 shares are in the green compared with 1263 that are in the red. All 18 out of 19 indices are in the red. The Nifty Realty Index is 0.5% higher. That's the only one in the green. The advanced decline ratios on Nifty 100, 200 and 500 indices are nothing to speak about. Even the mid cap and the small cap indices are undergoing a bout of profit booking. All said, the market has reacted in a very mature and in a very positive reaction to what has happened on the Adani Group between Hindenburg and SEBI. And Sakshi, I have this feeling that Adani Ports will show you a green tick fairly soon. Remember, it settled about 3% lower in pre-open. Now it's just down 1.5%. What are you watching?
Shell, it's another 15.5% higher in trade. after making that tepid debut, but the stock rallied on the day one as well. It's another 15.5%, 16% now higher in trade, sharply moving up. Several other stocks that are on the move are Shipping Corporation of India. Remember, earnings came in, and you do see about 7%, 7.5% move on this one as well. You can also see several other stocks that are moving up. Voltas is coming back, 6% higher in trade within the broader markets. Inox Wind is about 6% higher in trade. So some renewable energy focus right there. You have some tea coffee makers that are also buzzing. Dhunseri tea is up in trade. Then you also have auto ancillary stocks also moving up. You have Munjal Auto that's moving up in trade today, and several others that are joining the fray. Avas Financiers, again a new recently listed stock that is also up by about 6.5%. Several stocks within the broader markets that are on the move. Within the F&O space, again it's Voltas that's up 6%. Let's get in Rudra to talk about Voltas. The stock lied low for a long haul. Any signs of it picking up now?
Definitely, Sakshi. Voltas is now making that move beyond 1500, which was a very short-term resistance. So I feel if we close today above 1500, which is very likely, yes, this stock will touch its all-time high, which is at around 1560, and then post that it can even move towards levels closer to 1750, 1800. So a clear buy on Voltas, even at current market price and on dips to 1500, I will be buying Voltas. Keep a strict stop loss of around 1470, and then look at targets of around 1750, 1800 on Voltas. Yes, a clear buy.
Right.
9:30, ladies and gentlemen, the first 15 minutes have lapsed. Now, look at the Nifty. It's tested 24,286, which is the first support on the intraday chart. The other is the very interesting move that you are seeing on the Adani space. And Sakshi, now I see that across the board there is a very strong bout of buying that has come in. But Mr. Sunil Subramaniam is with us. A very warm welcome to you, sir. And we are looking forward to getting your views in as far as the broader markets are concerned. Let me just mark the pharma space till the time Sunil mics up and joins us. The pharma space is doing very, very well. At the moment, look at how Lupin is moving. You will see a very strong move coming into Lupin. Aurobindo Pharma, fresh record high, 0.5% higher, 1457. Eris Life Sciences, Ajanta Pharma, Alchem, Glenmark, all at record highs. And of course, what is moving very strongly is CDSL, 3.5% higher, 2657. Rudra, for you, CDSL, as also any pharma stock you think has the ability to outperform the market?
Shail, definitely yes, CDSL is a good buy. It has given a breakout above levels of 2525 to 530, and it is clearly trading at least about 1,000 point away from those zone. So if it holds this level, the breakout level at around 2,550, which it is most likely to do, I think still a bigger move on CDSL is possible from current level. One can keep a stop loss of around 2,500 and look at targets of 3,000 to come on CDSL. Again, at current market price and on dips to levels closer to 2,600, I will be a buyer in CDSL for sure. Now, when it comes to pharma, I am very, very, very bullish on pharma, and two stocks which I'll give you from pharma, from even current market price, which it can do very good, is one, Dr. Reddy, and two, Lupin. Lupin, I understand, yes, it has already given a big move from levels closer to 1,800 recently to current levels of around 2,100. So any dips to 2,000 zone will be a good buy for Lupin, where you will have a good risk reward, and one can keep a stop loss of around 1,850 and look at targets of 2,500 on Lupin. And similarly, as I mentioned, Dr. Reddy also looks very, very strong to me. So Lupin and Dr. Reddy are two buys when it comes to pharma.
Got it, Rudra. Let's welcome Mr. Sunil Subramaniam with us. Market veteran is now with us. A warm welcome and good morning to you, sir. Thank you so much for taking the time out. I'm sure you would be assessing each and every statement, rebuttal after rebuttal on the Hindenburg research report that came in late on Saturday evening and the entire Sunday. Tell us, how are you looking at the market reaction? Did you expect a mature reaction to this Hindenburg research report of the markets and the Adani Group stocks as well?
So if you look at the market, I think whatever it's showing now, I think about 0.5% down. I think up to a 2 to 3% impact can be anticipated. And the reason for that is there are mature, we talked about mature, there are mature players like the insurance companies, mutual funds and AIFs and PMFs. There are retail investors who tend to react. And also there are people who take stock positions versus mutual funds which take diversified positions. So given the fact that this incident occurred on Saturday night and has given people time to think about it, I think there are some people who are on the cautious note who would say if they are sitting on good profits to book profits today, right? But that being said, I don't think the market will go much lower for 2-3 reasons. One is, I think there's been an immediate counter by the SEBI chairperson, 1 and 2 followed. I think there's been good clarity around what is one. Second is, I think one has to understand that Hindenburg itself, they first tweeted that there's an India thing coming and then they came out with the report. So before that tweet, their action would have been to short the market and they would have probably advised, see, Hindenburg is a research advisory firm, they would have advised their customers to short. So today, if you see, some of those customers could, cover those shorts, right, to make profits. And so I think that it would be a healthy balance. And my eyes would be on good quality stocks which are correcting a little bit versus those which had risen up a lot and probably can fall a lot. So it's not that you should go rush in and buy that which has fallen more. But if you're keeping your eye on the fundamentals of stocks and saying there is a correction because of an unrelated event. But end of it, let's accept that whatever happens to this whole shenanigan that's happening with Hindenburg, nothing affects the quality of India's growth, the quality of the earnings, the future of our stock market. So I think these are all blips, and hence overall, I would say you should buy today good quality stocks and good quality sectors.
Namaste, Sunilji.
Namaste,
what a
namaste.
pleasure to have you, sir. And very warm welcome. Now you are in your new avatar and you can talk on stocks. Over the last 5 years that we have interacted, you have kept your views limited to the improving macro and of course a very good sectoral view and view on the markets, but not individual stocks. It is a distinct pleasure to welcome you, sir, and I hope you become a regular on Business Today, sir. I just want to understand now, where are you deploying your own personal money and where do you think lies value in a market which is sort of doing pretty well as far as indices are concerned?
So I think that if you see the situation of the market today, a lot of the good news on the Indian economy front is in the price. Okay, one has to broadly accept that. And so from a perspective of the larger cap indices, I think we are trading just about a long-term average. But on a broader market, we are slightly higher than that due to the rally in the mid and small caps. So my focus would be on accumulating good large caps in that space. That's my first priority, because I think it hasn't got the attention that it should have, because the retail flows, the 23,000 crore SIP book, is still largely weighted towards the mid and small cap space. So domestic fund managers are, I wouldn't say forced, but have no choice but to buy mid and small cap because the flows are coming in those spaces, right? So I think adequate flows have not been coming into the larger cap spectrum, and FII flows have been very iffy, right? They're coming in strongly, going out strongly, and that's the action in the large cap. So first of all, before I get into sectors and maybe stocks, I would say that my weightage is towards a large cap or a larger mid cap kind of a space, because that's where I believe there is some amount of value creation yet that can happen given the growth story. That's number one. Number two, when it comes to sectors, again, since I said, see, the basic thing is that one has to be a consistent contrarian in a time when liquidity is ample. I think that's the philosophy that I follow. So, to that extent, why I'm saying this is money chases growth, and especially the retail segment, they look at past returns, whether it's of mutual funds or of stocks running up, and take tips from influencers and everybody and go and buy that which is rising, right? So if during the time when you're assured of liquidity, right, if you stick to a consistent contrarian, and to that extent, then I come to what sector that I think that my weights would be around the consumption basket, and the reason for that, let me delineate a little bit. It's because India has seen a K-shaped recovery. So you've seen high-end houses, high-end cars, a high-end segment of the population post-COVID has grabbed all the benefits. The bottom of the pyramid, the mass market consumption hasn't bounced back post-COVID to the extent it should have. I see that leveling out and coming out, and so I think that the consumption space in a broader, whether it's discretionary or staples or even within housing, within auto, I would say that's the space where I think that the K-shaped recovery will now start into a U and then in a V gradually as Indian economy moves forward. And I think that's where the value creation has not been fully priced in. I'm not saying they're cheap, I'm saying they're not fully priced in. So that would be one bet. The second would be the banking and financial services space. And the reasons for that, let me again go a little bit deeper. See, I know there's been a lot of pressure and talk around the fact that deposit growth is not catching up with the credit growth. So the NIMs of banks, how will they perform? They are in a very sweet spot on the NPA cycle. Are they going to rise? I think in all of this, one thing which you've got to remember, and this is where for me this is going to be a good pick, is the fact that it's largely been a retail lending, retail financial services story which had taken up the bank earnings and growth. Now we are going through the phase where, with RBI and SEBI all conveying concerns around the retail phenomenon, right, of excessive lending going there and everything. I think there's been a little bit of a softening of the optimism around the banking space there, and which is fair given the retail part. But what I'm saying is that I see the green shoots of private capex starting. Now, the capex stories of those private capex have already been built into the infra space and the cap goods space and the defense space and the manufacturing space. But the fact that when that really picks up steam, which I think over the next 12, 18 months is a good bet, I think that the banks which have to finance it. And at that time, the NIMs will not be under pressure because the small and medium sector lending, which banks do in the capital goods suppliers, is not interest rate resistant. They have to complete their projects and they will borrow at whatever price. So bank NIMs, they should, though the deposit growth is not catching up with the lending growth, the NIMs should hold up because they will be able to lend to this segment at fairly profitable margins. So I think that we are going to see that trend reversal. I think NIMs will start to gradually go up. Loan books will go up. So absolute EPS, which is a function of price into quantity, right? Your margins into value should see. So I see that the banking space has not got the attention in the market. So coming from a slightly contrarian position, I'm looking to accumulate good quality banks.
Good quality banks. So we'll keep an eye out on all these banks right there. Coming back to you, Sunil, so stay with us. Rudra, coming back to you, just to take a view on how the markets first 15-20 minutes have shaped up for you. Where are you looking at strength and where are you looking at weaknesses emerge?
Sakshi, morning also when I gave my call, I was saying one can look at buying ONGC, and at current market price, both fundamentally on valuation terms, you have comfort. Also, you have on chart, there is a lot of support at around 300, 310 zone. So at current market price, it's a very good buy. So ONGC can be bought even at current market price, looking at targets of around 375, 400 to come on ONGC. And I also had a buy call on IEX. IEX also looks very, very strong to me. At around 195, it's a good buy. Looking at targets of around 235, 240 to come on IEX with a stop loss of around 187. So ONGC is a buy, IEX is a buy at current market price. And I also concur with my co-guest there that yes, private banks are also looking very attractive to me even on chart. Two stocks which I can pick from private banks are one ICICI Bank at current market price of around 1,150, 1,160. It's a good buy. And also one can look at HDFC Bank at current market price of around 1,650. So for me, HDFC Bank and ICICI Bank from private bank looks very good. If you want mid cap ONGC and IEX, which I have now spoken about, and if you want to pick sector wise few more themes, yes, I agree with Shail that you have good stocks to pick from pharma and FMCG. And when it comes to pharma, I like Biocon, I like Lupin, I like Dr. Reddy. So these are few stocks from pharma you can look at going long. And all these are stocks which are available in F&O also. And if you want to pick few stocks from FMCG, yes, for me, Hindustan Unilever, ITC looks very, very strong. So these are few sectors and stocks where you have comfort even at current market price, both on chart as well as fundamentally there is valuation comfort.
Fair point. A couple of stocks I want to mark, starting with the chemical sector. There's been a strong outperformance coming in from Excel Industries. Remember, it came up with a stunning set of numbers which saw net profit surge from I think 5-6 crore rupees in the quarter a year ago to about 40 crores. The stock is up double digits, and similarly you see a strong move coming in on Lakshmi Chemicals. This is now trading at 278. So keep these two stocks in view. The market is pretty much now stable. The Nifty down 92 points, 24,276. The knee-jerk reaction has now been absorbed by the markets. We will now wait for Europe to open somewhere between 1 p.m. to 12:30 p.m. to see if there is any fresh selling pressure that Adani stocks will witness from overseas players. But for the moment, it is fairly even Stevens. Remember, the cement giants, Ambuja and ACC, weren't impacted at all when it came to the pre-open settling. Adani Wilmar is doing pretty well, just 3.5% lower. And the energy space within the Adani group, which actually showed the real pain, down 20% in the first pre-open session, is now down between 3 and 4%. So that's how markets are reacting, and reacting fairly positively as far as the crisis is concerned. Let's get back to Rudra. Rudra, your top pick in the railway space. There seems to be some momentum, some mojo on the long side that's coming back.
See, Shailendra, if I have to pick up from railway, valuation is definitely a concern. In fact, not now. Last time, even when I was in your show, I was saying in general, both railway and even for that matter, defense, shipping, these are areas where I will definitely look at profit booking. And I was very clear. I said, if you want to stay with PSUs as a theme, then look at stocks like Coal India, look at ONGC, and you have to be in only those areas where we have some valuation comfort, or even look at Power Grid for that matter. So Coal India, Power Grid, ONGC, NTPC. So these are few areas where I might still be in terms of PSUs, or even look at PSU banking for that matter. Punjab National Bank at around 150 is a mouth-watering buy. And for me, even SBI now post its results and correction to levels closer to 800, 810 offers a great valuation comfort. And if you hold these stocks in your portfolio for next 1 to 2 years, you will definitely make money. And names like SBI, PNB, Coal India, ONGC, NTPC, I have valuation comfort. But I will strictly avoid, again I'm repeating, use this up move to book some profits or get out of stocks which are from the railway themes, or even for that matter defense, or even from shipping for that matter. And entering fresh at current market price is a definite no-no. But if you already have it, and if you want to ride the move, and if you want to still continue staying with these railway stocks or shipping stock or defense stocks, then you might consider that. But fresh entry at current market price for railway, shipping and defense is a big no. And if you want to stay in PSU, look at PSU banks and look at few stocks which I spoke now from PSU, and be very stock specific there, keeping in mind valuation.
Let's get Mr. Subramaniam back into the conversation. You did talk about banks and private banks at that. But looking at the reaction that Adani Group stocks have given today, would you be also a buyer in some of the stocks? Where do you find value within the entire group?
I think that it's important to look at the underlying businesses, and to me, the cement business is a very strong one, and I think the ports business. So I think those two would be the where the fundamental business is good, and any correction is a buying opportunity.
And beyond the Adani Group, where else, and beyond the banking space, where else do you find value? You know, Rudra was talking about railway stocks, defense stocks right there. These have been the runaway sectors, the PSU stocks largely. Do you think a large part of the value is now over and one should probably look other way, or are you still hoping to get some value within this space?
So it all depends on two things. So one is your return expectations and your time frame involved. I think if you're expecting 30-40% CAGR, those days are over. I think if you're more reasonable at a kind of a low double-digit growth and you have a 3 to 5 year time frame, I think these spaces still have it. But what happens is that when you see 30-40% and then you get 10-12%, you say, "Arey yaar, this has not lived up to it." So I think it's clear to have that very, very clear in your mind, because ultimately these stocks are playing off the India growth story. As I said, it's in the price. So the future growth now is a normative growth, which should be around the nominal GDP growth of the country. So I think the value discovery has happened, but the value creation in terms of aligning with the India's nominal GDP growth, that money is still there to be made if you have patience and your return expectations are aligned to the nominal GDP.
Right. Coming to you, Sunilji, we haven't interacted much over the last 2 years or so, at a time when defense has exploded as a sector of deep value creation, and of course one of the finest momentum plays. How do you see this space post this recent correction that we've seen in Hindustan Aeronautics, Garden Reach in particular, and of course the flowering of private sector defense space in the listed markets? Any favorites in this space?
I would say that see, what's happened there is that a few fund houses have raised large sums of money in these sectoral themes which can allocate to that, and that surge of liquidity has taken this up. So I don't think that's a sudden discovery of India's defense potential, defense this. It's a part of the Make in India theme, it's a part of the PLI process, and it's a part of the fact that PSUs have a very strong space there. So all this value creation, and then fund houses choosing to specifically launch sectoral themes around defense and everything, that's contributed to this rise, right? So my previous answer holds good for this. I think the value creation, that is the surprise element, has happened. Now you will see a normative growth. So I'm not saying that they are definitely valued higher than much in the past. So if you go by a historic valuation, they are looking expensive, but that doesn't mean that they will not deliver returns. So I would say probably the right way to put it is, don't go and fresh accumulate. What you already hold, I think you can continue to hold.
Okay, ladies and gentlemen, I need to mark the Nifty for a very particular reason, and that's at 24,240. If you look at the daily chart of the Nifty, it has touched upon a very important support level, which is 1 second, let me just get back to you. 2430 is a bounce back area. Let us see how it goes. But 127 points lower at 24,240. Nothing much to be worried about, but the sell-off, the mild profit booking that you are seeing on the Nifty was because Friday the index has surged up dramatically, and of course, as I have mentioned, that this is a truncated week, so option sellers are a little more cagey, and they are trying to get the best out of what is a 4-session weekly expiry. Rudramurthy, sir, your view on Lakshmi Organic Chemicals, 282 and doing pretty well.
Yeah, see, for me, this has been one stock for a long time. It has just been consolidating, and then, yes, after a session of consolidation, today you can even see that it is closing and giving that breakout above levels of 280. And even there is support of volumes when it comes to this price action. So I will be a buyer in Lakshmi Organic. And assuming today it closes above 280, which is the breakout zone, yes, this stock can go back and test levels closer to 330, 350 zone. So at current market price, yes, a buy. Keep a stop loss of around 265. Look at targets of around 325, 330 to come on Lakshmi Organic Chemical.
Okay. Mr. Subramaniam, getting you into the conversation, just right after the budget, the narrative was being built that the markets may now increasingly turn defensive. Stocks within the FMCG, the pharma pack, they may start to perform, and one needs to now hedge their positions with some of these stocks and staples as well. How would you look at these pockets? Do you think there is enough merit in this narrative?
Yes, I do agree. In fact, like I said, it's good time to be slightly contrarian. And while you should always keep an eye that there is no deep value in India, and that India itself is a growth market, as a growth space. So where the growth is not yet priced in. So I would look at what is called as the PEG, right? The price earnings, linked to the growth. So there, if you see that way, right, I still think that a slightly contrarian stance to stories which are broadly going to benefit from India's growth, but have not been fully priced in because their current earnings, they are not the flavor of the month, right? Is a smarter strategy at this point in time if you want to get additional returns compared to buying that which has already run up a lot. So I agree that it's a rebalancing time and in the markets.
So what kind of stocks within these pockets would you be looking at, sir?
So to me, like I said, for me, mass consumption, right? So within the auto space, I would say two-wheelers as a important play. I would say tractors again, because with the monsoon numbers coming in, that's a good tactical play. I would again, within the banks, yes, good quality private sector banks have suffered. So that's a value play. At the same time, I think I agree with Rudra in terms of the few public sector banks, because if you see in the fight for deposits, they have higher CASA balances, they have a better reach. And I see that the re-emergence of rural demand is a key theme that I think will play. And PSU banks are ideally positioned to benefit from that. A very, very interesting point I would say is RBI governor talked about food inflation. And we talk about food inflation negatively because it's not helping RBI to cut rates and, the narrative. But just remember one thing. If food inflation is hurting the common urban consumer, it's benefiting the agri owner of those, right? So the inflation benefits the rural population dependent on agriculture. So a little more money there would probably drive consumption. So as a filter, I think anything rural related, consumption related, I would expect it to deliver greater value. And so that would be a key theme in my mind at this point in time.
9:56, ladies and gentlemen. We'll start wrapping a part of the show at 24 to 27. The Nifty is actually checking and testing its weekly pivot level. Remember, this is a very, very strong support which should hold, but only time will tell. But for the moment, down 144 on the Nifty. The Nifty Bank slipping 300 lower, and the IT index down 164. The Nifty 500 is also 0.5% lower. What else looks exciting in the market is the sensible and mature reaction that the market has shown on the Adani issue between Hindenburg and SEBI, as also 361, the wealth manager that had launched that offshore fund. Yes, there is a red tick. Yes, there is selling pressure, but it seems to be sensible. Now Adani Enterprises is actually down 5% at 3026. Adani Ports down 3% at 1484. What is doing pretty well as a theme, the entire railway space from the PSU sector. Parts of defense are clicking in the green, and of course earnings have been reported very well. Look at PNC Infra, 5% higher. Look at Lakshmi Organic Chemicals, 4.8% higher. A strong move that is also coming in other stocks which are market favorites, such as HUDCO, reclaiming 300, 2.7% higher. CDSL again back in the green, 2.5% higher, 2630. And of course it's the metal space that is on the earnings limelight today. You will have numbers coming in from NALCO, NMDC and Hindustan Copper. Remember, these three stocks have been beaten black and blue over the last 3 months or so, and any outperformance or expectation of better earnings and those being fructifying, you will see a massive uptick. Sunilji, before we let you go, sir, your final view on the internet space, which is now flourishing for stock pickers such as you. A very quick comment, please.
A quick comment is it's high growth, high risk, and so definitely you should play it, but you play it with diversification, because which is going to be the winner is hard to predict. So put your bets on a few, spread it across the space, and even one winner will make up for the non-performance of the non-winners. So I think to stay diversified within that space, don't ignore it, is going to be the key part of India's growth story.
Do you have a view on Ola Electric IPO and the newly listed stock?
I think, see, it's I would rather look at IPOs a few months after they list, because the hype and the euphoria and everything means that all the good news is factored in. So I think that the company is good, the outlook for the sector is good, everything is good. But I think the price at which I buy would be something after the storm and the dust settles. Wait for the reality to come in and then step in. And if you see all these sexy IPOs of the past few year and a half, you would have been much better if you waited and then entered these companies. So I think that's my view even on this one.
Okay. Rudra, we'll take your quick view before we let you go, and that will be on the chemical space again, that Shail also highlighted for you. Stocks like Aarti Industries, are you still looking at those?
Yeah, last time even when we spoke about Aarti Industry and Navin Fluoro. But yes, at current market price, Aarti Industry is a buy, or might be a better level to buy is closer to its strong support at around 710. So post the data, you have this 710 as a strong support. So closer to this 700, 710 zone, you can definitely look at buying Aarti Industry. Keep a stop loss of around 680 and look at targets of around 780, 800 to come on Aarti Industry. But don't buy at current market price. Wait for that dip zone and enter at levels closer to that 700 to 710 on Aarti Industry.
Okay.
One, ladies and gentlemen, thank you so much, Rudra, for joining us. Very kind of you. And we look forward to strong moves on ONGC and IEX in particular. Those were the picks that you had mentioned. Very kind of you to offer us your views on the Adani Group as well. Thank you so much. Sunilji, thank you once again. Very kind of you to again come back into circulation in a very different avatar, and we look forward to continued views coming in from your end as far as the markets are concerned. And of course, we would love to host you if you are ever in Delhi to our studios in Noida, sir.
Happy to do that. Thank you. All the best, Shelly, to you. Thank you. Thank you, ma'am. Thank you. Thank you.
We are now, ladies and gentlemen, waiting for Mr. J.N. Gupta to join us. Remember, Mr. Gupta is an authority on how the functioning of regulators in the market such as SEBI are concerned. He's now the managing director of a non-profit organization called Stakeholders Empowerment Services, which he has set up. He was the executive director of SEBI between June 2009 and 2011, and was in charge of market regulation department for stock exchanges, Depositories and the Clearing Corporation, and in charge of the surveillance as well as derivatives department. A gentleman with a long corporate record with Grasim Industries, as also in companies such as Ocean Oil UK. Mr. Gupta is an alumni of the Indian Institute of Technology from Kanpur and has done extensive work with SEBI. We are looking forward for Mr. Jain Gupta to join us, but for the time being, it's a very strong move coming into HUDCO. It's reclaimed the 300 rupee level, and of course strong moves coming into Medanta, down 4%, 1084, and of course a strong move on the green side on stocks such as Supriya Life Sciences, 5.5% higher at 475. Sakshi, what are you watching?
It's only the consumer durables now, Shail, that's holding up into some green ticks. Rest of the sectors, they've all slipped lower. It's the PSU banks, the media stocks that are showing down ticks of about 1.5 to 2%. The Nifty Next 50 has slipped. FMCG, broader markets are also under pressure right now. It's the India VIX that is rising, 6% higher in trade right now. As far as the India VIX levels are concerned, 16.2 can actually be seen on this one right now. Within the Nifty, if we look, the Nifty itself is down by 0.5% right now. It's hovering near the low point of the day, about 130 points lower. Just about very few stocks, I think about 8-9 stocks that are holding up into the green. Rest of the stocks are all lower. Grasim, JSW Steel, Tata Motors, Maruti, Cipla, Axis Bank, HDFC Bank. So some private banks, some automakers, and some industry builders, building material companies. These are slightly higher in trade, but rest of the stocks are all lower. Even the PSU index, that's lower by about 1% in trade right now. We are going to be also looking at some other stocks. Let's look at some interesting stocks if we can pull up from the broader markets. We do have very few stocks here that can actually, Shipping Corporation of India is now 9% higher. Remember, there was a strong set of earnings that came in from shipping. Profit zoomed by about 70% to 291 odd crores. Revenue jumped 26%. So that's the kind of reaction that we are seeing there. Munjal Auto is doing very well within the auto ancillary pack right now, 6.5% higher. Then you also have stocks within this space. Sadbhav Infrastructure is moving up in trade. SMS Life Sciences is 20% higher in trade. So those are some of the stocks within the 20% upper circuit right now. Let's look at the F&O space as well. Coromandel International is also buzzing within the agri space wide over there, 3.6% higher. You also have Jubilant FoodWorks. That's also a reaction to the earnings. Remember, the profit zoomed by over 100% for Jubilant FoodWorks to 58 crores. Revenue jumped by about 45%. So the stock is hovering about 2% higher in trade, and it's also among the movers within the F&O pack. Even Siemens is up and about in trade. In fact, there was a brokerage house update as far as Siemens is also concerned. It came out with the numbers, and brokerages like MOFSL, they do believe that while the earnings were a big miss, but the thesis intact, and they've now given the target of 7,800 on the stock versus their earlier target of 8,600. The stock is still hovering about 0.8% higher. In the F&O space, it's still up. Then you also have stocks like Oro Pharma, Piramal, they are moving up. So the pharma space is definitely garnering us some attention at this point in time. Maruti Suzuki is about 0.7% higher in trade, and Tata Motors also about similar, 0.6% up move. Hero Moto, Eicher Motors. Auto space is definitely looking good as of now, along with auto ancillary stocks, Shail.
Let's look at spaces where traders and investors are enjoying the bounce and showing very, very high degree of volume. For the moment, let's focus on PNC Infra. This is 5% higher at 489. The numbers were very good, and now about 19.8 lakh shares have been traded, which is 5 times the 5-day average. Voltas at a record high, 1535, about 4.5%, 4.5 times the volume that we are seeing today, which is 50 lakh shares. I think Mr. Jain Gupta has joined us. Good morning, Mr. Gupta. A very warm welcome to you, sir.
Good morning.
Yes. Namaste, Mr. Gupta. A very warm welcome, sir. How do you see this issue that is now being grappled both by the market regulator, and of course the allegation that has come in from Hindenburg research? Do you think the response that has come in from SEBI, and in particular the chairperson, is adequate, and should we move on from this?
I would say, to start with, first of all, there is no issue at all. It is unfortunate that we are making an issue out of it. But since it has been an issue has been made out, then it is the duty of the people involved to give their clarification. And though two individuals are involved, that is Mrs. Book and Mr. Book, and an institution, SEBI, is involved. Both have already given their viewpoint on this. And I think with that clarification, there is no doubt left that there is nothing which is worth discussing or worth talking about. Because if we keep on talking, we are giving weight to something which doesn't deserve any attention. And of course, their intention is to cause problem, their intention is to seek attention, and we are falling victim to that.
Mr. Gupta, very good morning. Sakshi this side. I want to understand from you, sir, what will be the course ahead from here on? Last time around, when Hindenburg Research had come out with a report on Adani Group, it was a long drawn process, a year-long process that took place. Legal actions were taken, the process was followed, and the markets therefore were consistently in a volatile scenario to really look at when the clarity will emerge. And only once the final Supreme Court verdict came in, clean chit was given, the markets gained some stability. On this issue, on the fresh report, what is going to be the course ahead?
See, I'll tell you that two things are totally different. When the Hindenburg report came in 2023, it was a very long report, and there were transactions, there were allegations of manipulation, there were allegations of accounting fraud, there were, you think of an allegation, that allegation were there. This time, there is no allegations like this. The allegations are very simple. If you can say 3 or 4 allegations. One, their investment in 2015, then REITs, then her owning a company, and these are the basic 3 allegations. And you let us look at one by one. Tell me what you do today. Do you have any idea what is going to happen tomorrow? So if you do not have an idea for tomorrow, how in 2015, when they were residents of Singapore, they invested in a fund, she would know that, oh, one day she will become chairperson of SEBI, or one day Hindenburg will issue a report, and then she will be investigating it. So it is too far-fetched thing. But even then, understand one thing, that when you invest in a unit of a fund, do you do KYC, or the fund does KYC of you? What Hindenburg is alleging is that Madhvi Book or her husband should have gone to the fund and said, oh, give me KYC of all the unit holders of fund, I will do analysis. And not that, I will also go to an astrologer and find out, is there any chance of somebody will bring out a report against that person in 7 years or 8 years? That is one part. So nobody would have thought of this. But even then, the clarification has come that there is nothing there. But my question will always be that why it is there that Adani shares are something like untouchable. Everybody says that I did not do investment in Adani, or if somebody, Adani has invested there, why should I be part of that unit holder? Why? I don't understand why this thing is there. As long as there is nothing against them, Supreme Court has given clean chit that there's nothing has been found, and maybe 1 or 2 investigation pending. But during that period, you can't say that the person has become a blacklisted person. So that is one. Second part, REITs. understand very clearly that SEBI laws are not made or circulars are not issued at whims and fancies of anybody, that one day Madam Book decided to come to the office, called her secretary and say, okay, let us change the REITs regulation. There is a process. There are internal committees, there are external committees. Those committees give reports which goes for the public thing. Only after a detailed public consultation is there, then this thing happens. And you have been covering all the markets. Tell me any other regulator which is so transparent in their lawmaking process. Neither RBI is that transparent nor IRDI is that transparent. So let us give the devil his due that SEBI does it everything in transparent. Third comes her company. Now I always say that she has clarified that as far as those companies are concerned, they are dormant, because once she became chairperson or when she became WTM of SEBI, there was no business. Now I ask a simple question. Suppose there is an industrialist who has got lot of money, lot of companies. Their son or daughter doesn't want to pursue business. They want to become bureaucrat or regulator. Do you think that the son and father should be separated, or the company that he owns or she owns, he or he should sell the shares? It is not possible that the shares can be sold. So issue is very simply, as long as my conscience is clear, I should not be bothered. And I always say a public servant must behave like an elephant. Walk your own path. Don't bother what people are shouting from behind.
Absolutely. Mr. Gupta, this is very well said, and there is a Hindi idiom which goes very well with the thoughts that you mentioned. Hati chale bazaar, kutte bhonke hazar. This is exactly what you have paraphrased.
I did not want to use the word
remedy.
I did not want to use the words.
No, this is an idiom. Yes, this is an idiom, and of course, the beauty of the idiom is that it falls beautifully in. It works beautifully in explaining how a person should react to when such allegations are made. Sir, I need to understand from you, as also does the market, what are the remedies that the government of India has in such a case where the image of the country, the image of a regulator, and of course, foreign flows are likely to be impacted with this kind of frivolous reporting. What can be done according to you? You've been a WTD with the SEBI. Of course, you understand legals more than us. What do you think should be the game plan of government of India?
See, I never say that I understand everything better than everybody else. No, I don't say that. The only thing I am saying, first, everybody is asking what is the course of action. So the first course of action is throw this report into dustbin, and probably dustbin will also reject it, that it is not even worthy of lying in my place. Okay, so reject this. But then people are making noises that Madhvi Puri book should resign, government should remove it. My request would be, government should not come under pressure like this, because by removing her or by doing anything like that, you are giving credence to that report where it doesn't deserve anything. Third is this, that anybody who is demanding resignation or removal of Madhvi book should forget about all the fight that they would have had with Madhvi book or they would have had with the government. Think of the country, that what message you are going to give to everybody if you ask for removal. Then you are giving credence that your integrity of your regulatory chief was in doubt, which is not a case. So I would say the future course of action is very simple. Ignore this as much as possible.
Okay, Mr. Gupta, we'll just pause, and I'll want you also to listen to one bite that we have now, very important bite. Mr. Ajay Seth, the Secretary of DEA, has given us a bite and is talking about the issue, the Hindenburg research report and the reaction that SEBI chairperson has already given. Let's listen in.
SEBI has made a has given a statement. Chairperson has also made a statement. I have nothing further to add on that.
So, would the government intervene in these cases?
As I said, that both of them have made the concerned person as well as the organization, regulator has made the statements, and there is nothing further to be added by the government.
But any inquiry that you might set up to see if there are charges are correct or not, sir?
Again, I would like to reiterate it. Just read the two statements.
Okay, so there you have it. Ajay Seth, Secretary TEA, did talk about that the statements have already been issued by SEBI chief and her husband. So there is nothing further for the government to add to this. Mr. Gupta, of course, the reporters were trying to add whether there will be an inquiry, or a committee will be set up, etc. But nothing was specified on that. How do you see the government's response right now?
See, again, I would say, as of now, whatever you have heard from the government representative, they are very clear that in their mind, the response of SEBI as well as Madam Book and Mr. Book is sufficient. But one doesn't know how things move out because there, as you have seen, there is a pressure of opposition and something like this. But I would say the government should show the spine of steel and not bend.
Right, Mr. Gupta. So the controversy is laid to bed as far as the markets are concerned, the government is concerned. Of course, the three clarifications coming in from SEBI, from the Adani group, and of course the fund manager who was running the show. From now on, is there something that the government of India can do at its level with the place where Hindenburg is registered to put in some kind of checks or put in some request, because this is now becoming a regular feature?
See, ideally, it should be a case that when you malign me, I should be able to take action against you. That should be the right case. But unfortunately, this doesn't work. Anybody who has intention of bad mouthing you, somehow or other, he or she gets away. The issue is very simple. Should I spend my time and waste it on these issues, or should I do my work? And I very simply say that your work is your benchmark, your impression for the future. Nobody will remember what was said against you or what was said in favor of you. But if you leave a mark of your work in your organization, people will remember you. And I will again say that in today's scenario, SEBI is at forefront amongst all regulators in the world. Our securities markets are as robust as it can be. We have systems which are far ahead of anybody in the world. And as far as the regulations are concerned, we are also ahead. And I give an example. 3 days back, I was reading that United Kingdom has decided to regulate ESG rating provider. Very well. But do you know that India already has this legislation since last 1 year? India is the only jurisdiction which regulates proxy advisor. So my issue is very simply, our work should be our Bible. Nothing more. I don't care a damn what you talk about me.
Absolutely. Mr. Gupta, there could have been no better person than you to come up with such a strong statement, given the background that you've had with SEBI and of course a very long corporate career. We thank you for sparing time for us and of course coming up with such erudite thought and wisdom. Very kind of you, sir. That, ladies and gentlemen, was Mr. J.N. Gupta, a SEBI veteran who now has a non-profit organization called Stakeholders Empowerment Services, and he has categorically said that such kind of narratives should be put behind your back and one must move on. Sakshi, yours.
All right, viewers, we'll start wrapping up the markets now for the morning edition. This was an extended session to help you understand various points of view as far as the Hindenburg Research Report 2.0 has come in, attacking SEBI chairperson and SEBI's leniency in looking at the Adani offshore funds and how they were used by Adani to manipulate stocks. This after the Adani Group and the entire scenario of 1.0 report was given a clean sheet by Supreme Court. The markets are now settling down about 70 points lower in trade, 68 points lower in trade, 24,300 right now on the Nifty. So it was a volatile first 45-minute, 1 hour in trade, and now we are seeing the Nifty bank come back into the green. So that could be leading in some recovery coming back to the markets along with consumer durables. Now you also have realty, metals and the private banks that are leading some recovery in the markets to come back. It's stocks like JSW Steel that are up by 1.5%. Tata Motors, HDFC Bank, Axis Bank, Hindalco and Grasim among the top movers. You also have several stocks within the F&O pack. So Voltas is now 7.5% higher within the F&O. Coromandel International, Jubilant Foods, Glenmark Pharmaceuticals, Piramal Enterprises, Trent, Grasim. These are the stocks that are buzzing, within the F&O space as well. Broader markets, again, a lot of names right there that are sharply higher. Ola Electric is now 19% higher in trade. Just day 2 of its listing, and a strong move on that front. You also have stocks like Shipping Corporation of India that's up sharply higher, Munchal Auto, Aero Green Tech, you have Lakshmi Organics, you have stocks like you also have stocks like Stovecraft, Shipping Corporation of India, Sadbhav Engineering. These are the kind of stocks that are buzzing in trade right now. So all in all, it looks like the first initial knee-jerk reaction may be settling down. The Adani Group stocks are down anywhere between 1 to 6%. Let's show you that also while we wind up this edition. Adani Enterprises down by about 3%. Adani Ports also, let's look at how that one is reacting right now, about just 2% lower. So it's off the low point of the day. When we look at ACC, Ambuja, let's also look at Adani Energy and Adani Total Gas as to how some of these stocks are also performing. ACC is just down by about 1.5% lower in trade. You have Ambuja that's just 0.5% lower. It's come back from the low point of the day. So not too much of a reaction. It's a mild downtick is what we can see after the Hindenburg Research Report, and such a sensible reaction to the overall markets is what we've seen. We'll wrap it up at that. Thanks from both Shail and me on this special edition, but do stay tuned. Throughout the course of the day, we will continue to get you top market voices and those who are looking at this issue very, very closely. Reports from the government, bites from the government, everything that you can get to expect on Business Today television.
Land usurped with no warning, disputes spanning decades. Even as the government brings in amendments to the Waqf Act, here's how the current legislation has impacted people across the country. In 2022, an entire village in Tamil Nadu was swallowed up by the Waqf. Tiruchendurai, a village in Trichy district, was claimed by the Waqf board